So this is for Business 33 Exam 2 review, and we'll also be going over some Exam 2 review questions. So to start off, Chapter 7, Chapter 8, Chapter 9, and Chapter 10 are all going to be in this exam. To start off, for Chapter 7, what does activity-based costing, abbreviation ABC, attempt to do, and how does it differ from a traditional costing system? Activity-based costing attempts to better the quality of calculations by using the amount of activity used to absorb the overhead rates. Now, three main things that you need to remember, especially when you're doing budgeting for managerial accounting, is there's direct materials, direct labor, and manufacturing overhead. Overhead is basically anything other than direct labor and direct materials. For example, ordering more materials of a certain thing, fixing machinery, property taxes, wages and salaries, administration charges, things like that you also include in the budgeting, because anything that you do as a transaction you have to account for, because the company is either gaining or losing money in some shape or form. Activity-based costing distributes overhead to multiple activity pools. Activity pools is a group of individual costs, typically by department or service center. For example, the cost of the maintenance department is accumulated in a cost pool and then allocated to departments using its services. So for example, overhead costs, right? That's the main part of it. And then below that, you have setting up machine cost pool, the second one. And then below that, you have number of setups. So of course, that'd be calculated by the amount of time that it would take, and then you would times that by like the wages that the workers would get paid, and then below that would go to the product itself. So the activity pool is setting up machine costs, or another example would be supervising cost pool. So somebody that's supervising the workers create this product directly. Keep in mind, they're not making the product, they're watching the people make the product. Then that goes down to direct labor hours, because they're still working and it's still considered labor, just a different form of labor other than directly to the product itself, which is why it's an overhead. Overhead basically means anything that has to do with ongoing business, okay? Activity-based costing also differs from traditional costing because it can be changed, and it also focuses on different sections and different stages itself. So the 5 stages of the activity-based costing is: first, identify the activities performed in the organization. Second, determine activity cost pools. Third, calculate activity rates for each cost pool. 4, allocate activity rates to products or services. And last, calculate unit product cost. Now, traditional cost systems rely exclusively on allocated bases that are driven by the volume of production. So its basis of traditional costing is on the actual making of the product itself, not the separate step and sections and the cost that it takes to have all of those. Versus activity-based costing is on every single step, and it's more precise and it's to the point because it allocates everything that is done in the factory and on the property with all of the workers. Everything like that is actually calculated. Second question, why would a company want to adopt activity-based costing? Well, activity-based costing provides a more accurate method of product/service costing, and activity-based costing enables effective challenge of operating costs to find better ways of eliminating overhead costs. Activity-based costing is also mostly used in manufacturing industries since it enhances the reliability of cost data, because manufacturing industries, separate from like smaller owned businesses, they also have the money to actually pay for this to be done, since it is extremely expensive and time consuming. Bigger industries have to be careful of time management along with pricing and then consumer demand and then price fluctuations. They have to be more precise and attentive to different things compared to a smaller business. Third question, be able to classify activities as unit, batch, product, customer, or organizational sustaining. So unit, easy peasy, is incurred each time a unit of a product is produced and includes costs such as materials and labor. Includes direct materials and direct labor because it is the unit, it is the product itself. Though unit is separate than product, unit can mean different things. So unit can mean like the specific piece of the product. So a unit, for example, if you're making headphones, a unit of the padding put on the headphone is still considered a product. But then if you're making the headphone as a full thing, then that simple unit added to like 6 other units can equal a full product. So it's not necessarily the whole product itself. It can just mean a piece of the product that the company manufactures in a separate area, but they calculate it all together, if that makes any sense. Batch, just like food, is incurred every time a batch of items is manufactured. For example, purchase orders, machine setup. This can also include costs associated with purchasing and receiving materials. Okay, so for example, the headphone example, if they need to buy extra padding for the headphones and they can't make enough in time to actually put out the product, because even these companies have a specific time frame. Say they need to buy additional padding from another company. Well, that is also included with the batch. Batch also includes machine setup. So let's say they need specific 3D printing machines to make the bar of the headset. Well, then you have a batch of them, right? Like a batch of bagels. You have a batch of machines. You have a batch order. So it basically just means quantity of an order, quantity of an activity. Product is incurred each time a product is produced. Includes costs such as engineering costs, testing costs, or quality control costs. So this has to do with the whole made product itself. For example, it includes testing costs. So headphones, of course, before they can put it out, they have to test it, right? To make sure that it's not too loud, that it's not too quiet, that it works properly. Quality control costs basically means the product itself has a specific quality. But if the cost doesn't match that quality, then it's not fair to the producer nor the company, because the product is either made with high value units, high value units, and then the product is priced too low. Well, then the company is losing out on money. Consumer sustaining relates to a specific consumer and includes sales calls, catalog mailings, and general technical support not tied to any specific product. So this is to the company as a whole. So the company as a whole can be consumer sustaining. Organizational sustaining are the activities taken to maintain operations of a business. For example, paying property taxes, utilities, insurance, anything to do with the physical company itself and the physical operation in which the product is being made. Now, this can be done over multiple places. Most of the time, when the budgeting is done, it's specified on one specific area, and then each one has a different budget made. Because, of course, like different machineries, different amount of people needed, etc. Alrighty, next question. Be able to compute unit product cost and product margin, testing both a traditional single cost driver for overhead as well as the activity-based costing. Traditional single cost driver. So as I had researched, under the traditional methods of allocating overhead based on direct labor dollars, the total cost for balls, so a product, would be divided by total direct labor dollars for all products to determine the per unit cost. Activity-based costing is to calculate the per unit overhead cost. Under activity-based costing, the costs assigned to each product are divided by the number of units produced. What effect does adopting activity-based costing usually have on product? Well, adopting activity-based costing increases understanding of overheads and cost drivers and makes costly and non-value adding activities more visible, allowing managers to reduce or eliminate them. Like I had said before, activity-based costing is very important because it helps you understand everything that the company is putting money out to do, and it also helps like managers, because this is on managerial accounting, to look specifically at those things and be like, oh, we don't need to keep spending money on having the knife sharpened. like twice a month. We can just do it once a month because so and so reason. Like ways to make the service or the product more cost effective and save the company money. What are some drawbacks to adopting activity-based costing? First of all, time consuming and expensive to maintain because they have to have specific people to collect this data first. Then you have to have specific people to calculate the data third. And then fourth, you have to actually give this out and to show managers and to explain it. And then you have to start implementing new rules, new practices. You got to push and pull, you got to pick your battles. Activity-based costing has numerous cost pools and multiple cost drivers, and therefore can be more complex than traditional product costing system. It can provide costly to manage the system itself because there's so much in just this one system. Even if it's for one specific place, it is time consuming. If you like this video, do be sure to comment and like and subscribe on this channel. I have my own personal channel called Financial Lemon. Do check it out. We'll have some cool stuff coming out in a couple of months, and stay tuned for the next few videos, which will go on to chapter 8, chapter 9, chapter 10, and also do some exam questions.